Hi and welcome to the Market Alert for Thursday the 27th of April 2023. So news for yesterday: big tech and Bitcoin jump, bonds and bank stocks dump as US default risk soars. They won't be defaulting, and if they do, they did this under the Obama administration. Then a few of the government bodies close down and then they print the money, raise the debt ceiling, and everything is fine. And that will be the same again. They generally ham it up before all of this happens, and that's what you're seeing in this particular headline. Stocks mixed as First Republic knocks on death's door, but Microsoft keeps bid in tech. That's the Call of Duty. I think it's 75 billion or 57 billion or something. It's a massive amount, but the Monopolies Commission have blocked it. US stocks were mostly lower amid banking sector woes, while the Nasdaq was kept afloat by tech earnings. So that's the picture. A bit of banking problems, Microsoft trying to buy Call of Duty, and like I say, the debt ceiling starting to make its appearance too, but that's after May. I think it's June when that kicks in. Economic news for today. What have we got? 1:30 p.m. We've got advanced GDP for the US, 2.6 last time, so a drop off in that if it's correct. And unemployment claims, and then over to pending home sales, which we've got there as well. So a bit of news around today as well. But before all that's released, let's have a look at yesterday's market action, see what happened with regards to the Dow, DAX, S&P and the FTSE. And starting off with the Dow, you can see the market trading down to the 89% retracement we drew in yesterday. Well, it traded just a bit below that to the 50-bar moving average, of which overnight the market has found support. So this is to continue, then I've drawn a few fibs over here and targets of where the market's likely to rise to if it has the momentum to do so, and also of course that First Republic Bank doesn't go bust during today. In the 30-minute chart for yesterday, it was very sideways until the Dow kicked off, only in a 100-point range actually. Very choppy, broke out initially in the Dow and then got hammered to the downside. We had the obligatory bounce and then we continued to the downside there. The bounce came in at 78% in that area, just below the close, and the 50 EMA as well. Market struggled with the 20-bar moving average thereafter. Overnight, the market's not anywhere near yesterday's low and is actually sitting above yesterday's close and looks quite strong to putting the tack in at the DP and the 50 EMA and also the BRN there. As we can see overnight, just sideways, having found buying late on after the close of yesterday's trading session there. In the German DAX, similar picture. This time it's the 20-bar moving average. The market trying to get back above the 38% retracement and also the 20-bar moving average there. These are the upside target prices for the German DAX should the market start to move back to the upside there. In the 30-minute chart, a very choppy session. We sold off initially and then we bought straight back. They weren't letting this drop yesterday. They brought it back above the low. As can be seen there, we went down to the S1 and then the S2, and then where the market found support before, and it did so last night. Like the Dow, we're above the close. We're a very close range of the DP and also the 50 EMA. It's a bit of a foregone conclusion they're going to try and gun this market to the upside when they kick off at 7 a.m. In the 5-minute chart, let's have a look at the overnight whilst we're here. You can see again how the market's moving to the upside and above the close. Even a drop below there, with that price action alone, the market is moving back to the upside as it closed off the low there. So watch the DP with the 5 minutes. Last night you can see the rally back when the Dow finished selling on the electronic market as well. Yesterday morning it was pretty nasty to begin with. Futures market sideways. We traded up to the 200 MA and then we just sold off, as can be seen there, down just below the S2 to the BRN. This level being 15,700. And then the market moving to the upside, having found demand divergence and being oversold with momentum moving back. Notice how the 200 MA though became a bit of a pain for this market yesterday until the Dow opened and had enough momentum to drive up there. Otherwise we were stuck in a range where the market found support as well, which you'll see from there to there will be just 89% retracement. Market didn't hold above the 200 MA. Again, we came back, we retested the BRN once we closed below that. You can see that eventually gave way, capitulated to what was happening in the Dow, and we dropped down to the S2 once more to retest this, which we looked at in the 30-minute chart there, where it had become an interesting area early on. Shot through in the morning, but they soon brought it back. They had that in mind to do so there. And in the S&P, demand for yesterday as well, we're oversold at the 50. There's your upside targets. That's what they want to do. They want to bring this market back. 30-minute chart, again choppy till the official time. We move down, trade to the BRN, which is now yesterday's low, and the market stuck in a bit of a range, closer to the DP than all the other ones though. Just needs to break through that to head back towards the R1 high, and also has the 50 EMA to get out of the way should it move higher. In the FTSE 100, only back a retracement of 38%, unlike the other markets. So we had an 89 down to 38, sitting at the 20-bar moving average with an increase in volume there as well. In the 30-minute chart, very choppy session yesterday. We broke down after the Dow opened, but we found support at the S2, and overnight we're sitting at the close. Looks like we'll have no trouble getting through this and heading back to the DP there. In the currencies, sideways for the GBP JPY at the moment, stuck in a range, got the demand there, closing back above the 20-bar moving average. This is a common feature in every time frame. The market needs to get above 62, 78, 89, and then the 167.96 if it is to move higher. In the 30-minute charts, we moved higher initially, got through the DP, then we were hammered back to the 50 EMA, back through and retested the EMA. Then we had news, and then we were pushed back down following the news of the 200 MA not holding, all the way back down to the close and the BRN before we had another look at the top. So at a double top there, and then the market making its way down. But overnight, above the DP and the close and the BRN, and that's what I'm expecting from the stock markets this morning as well, unless First Republic announces that it's no longer in business. And in the dollar, we're still looking at this 100 level, isn't it? 101. The market currently still holding there, but we are starting to make a few lower highs over the last 24 hours. So a bit of weakness coming there with the dollar. Meanwhile, in the metals, got demand for yesterday, just like we saw in the S&P, at just below the 20-bar moving average. They were determined to bring it back. So this being the case, here's your upside targets. We need to get to 26 really, which we've looked at before, but so far failed. I'm amazed at how well silver is doing in this sideways range at the moment and holding the channel quite well. In the 30-minute chart, very quiet yesterday until we had the news at lunchtime. Then we sold off, taking out the close, the DP, 200 MA and the others, before we found some support in the market, currently back above the $25 per ounce level there. Watch the 200 MA as well, as this is a very useful support, which coincides with the $25 per ounce level. Gold still struggling with that 2000 level. I think it's trading around there at the moment, but again you can see we're stuck in that sideways move, but we have been making rising lows in the daily chart over the last few days. In the 30-minute chart for yesterday first, we were sideways and quiet till the news hit. Then the market digested this, and the price of gold was slammed back below $2,000. That red line there is the $2,000 level. And you can see what's happened overnight at this level as well. We've gone through and then they've hammered it once more. As the reason is very simple. Central banks buying more gold than the moment than they've ever done since 2010. And of course they want the price to be low as possible. So that's why you're seeing this as well. And finally, in the gold-silver ratio, this finding some sideways move over the last 24 hours as well. You've got Monday's action there, but yesterday and overnight starting to remain in this sort of defined sideways channel for this also. Okay, that's it for this one. Let's see what the advanced GDP numbers come out at 1:30, but until then the market's free to move back to the upside, barring any sort of banking crisis. Okay, that's it for this one. Have a great day, and as ever, thanks for watching. See you in the next one.